Out set of numbers, frankly. Q1 FY27 from Galaxy. We have K Natarajan, Managing Director, joining us, live at this point in time. Very quickly, first off, sir, you recently signed a partnership growth charter with Unilever. Let me start with what does this mean and what changes your relationship with regard to this with Unilever?
Oh, yeah. So this is a relationship that is over 4 decades. And it essentially, this growth charter is in formalizing the sort of strategic projects that we are working on, putting in a structured framework and enabling both the organizations to stay focused on delivering mutually beneficial value.
Right. Mr. Natarajan, does this charter then involve dedicated volume offtake commitments or joint co-development of green surfactants as well?
This charter is essentially to have a framework in place to enable both the organizations to stay focused on the various initiatives that we have aligned on, which essentially straddles a lot of growth agendas in line with our strategy and Unilever's strategy. As we move forward, this will set the tone and the base, for any business commitments that can happen once these things progress. But as of now, this is just a framework to enable both the organizations to stay focused and commit resources to progress those initiatives.
And is there a financial commitment attached to this charter? CAPEX, dedicated capacity, exclusivity in certain categories, anything of that sort?
This essentially, this is all developmental agendas, and this will involve whatever, it will be majorly in terms of our resources, in terms of our human resources that we need to commit, in terms of certain capabilities we have and what they have on their side. It is not in terms of any capex commitments or whatever that we are working on. These particular initiatives, once they progress, they may lead to certain commitments, but that we will know only as we reach that point.
Right. And let's also talk about your results. How was the domestic growth for you in the first quarter?
Essentially, the India demand was pretty muted. Majorly because I think there were multiple headwinds in the previous year from a market's perspective. With the GST rationalization that happened in the month of September, it actually had a huge impact in terms of the pipeline inventory getting rejigged. And we could see that the demand started coming back from end of Q4 of last financial year. And obviously, the GST rationalizations clearly seems to have incentivized or propelled consumer demand that was pretty weak. And it's also evidenced by the commentary that most of our customers in India, have been, talking about. So this essentially is the market coming back to what the growth was there. Last 2 years was flat. The GST rationalization that the government did essentially has got the demand back at the consumer end. And that was one of the key contributors as to the growth we had in India, both on year-on-year and quarter-on-quarter basis. The reformulation that happened in our favor was more because I think the West Asia crisis had an impact, on the petrochemical derivatives supply chain. And we expect this to continue, in the coming months as well, based on what we have been hearing from our customers.
And export freight rates saw sharp spikes during the quarter. How was margin impacted in Q1, and what's the trajectory like going forward with regard to this in particular?
Yeah, so freight rates have gone up pretty significantly. The major bother that our teams have is in terms of how do we reach material to customers on time as per commitments, because the on-time performance rate of sea freight has come down significantly. It's much below 50%. Having said that, I think the freight rates have been going up last quarter. Even now they're going up, combined with a very low performance in terms of on-time delivery. The challenge is not in terms of passing on; it will get passed on with a lag. Okay, we do see that that's not a significant bother for us. What is a bother for us is how do we ensure that we reach customers to material to customers in a timely manner. Okay, looking at various options. Okay, that can enable us to serve them well. Okay, passing on the cost happens with a lag because even the customers know that what the freight rates are and how volatile they are.
Also wanted to understand about AMED as well. Saw a decline from West Asia disruptions, but a sequential recovery. Is that region now largely back to normal? And what's your expectation from the segment for the fiscal?
Yeah, so essentially the quarter-on-quarter growth only underscores the fact that the demand scenario there remains robust despite the crisis. We could have actually grown year-on-year as well, but for the crisis on the incoming logistics side, most part of the quarter, we couldn't just continuously have our production runs. Things have started improved. We do see the demand scenario even going into quarter 2 sustaining, which essentially would mean that we would see our AMED market coming back into a growth trajectory.
Mr. Natarajan, what I'm most curious to know, you've raised your EBITDA per ton guidance, and it's not a small hike. It's quite a significant hike that you've undertaken, but volume guidance largely unchanged. What gives you the confidence that margin sustainability, given how volatile raw materials have been?
First of all, what is the main contributing factor is the way structurally we have our specialty ingredients growth that is happening based on all the efforts that we have been putting over the last 2 years have started yielding results, which is one of the main drivers in terms of why we are looking at higher guidance on EBITDA per metric ton. The other also in terms of the way that we're looking volume growth to come back, we have been flat or slightly negative in last year and the previous year, financial year. That essentially means that the operating leverage that we will have on our performance surfactants plus the mixed benefit in terms of specialty ingredients business really progressing well this year gives us the confidence to raise the EBITDA guidance per metric ton.
Right. And what's the outlook on FY27 in terms of volumes, margins? Will the partnership charter with Unilever be accretive to your margins for the full year?
Well, so I have, so there is, with regard to this year's guidance, I did mention very clearly that we are guiding for a 6 to 8% volume growth and a 24,000 rupees to 25,000 rupees per metric ton of EBITDA. So that essentially is the guidance for this year. Now, with regard to whether there's anything that this current charter that we have signed is going to result in any accretive business this year, that's not the case because these projects are focusing on medium-term and longer-term initiatives. A good part of whatever is happening over the last 2-3 years has been based on the sort of way that we have been progressing on various work that we have done. One of that is the project that we are working with them collaboratively in line with their strategic agenda in Mexico. So there are many such that are being worked upon, but only at the right time when things fructify, we'll be able to announce that to the market.
All right, Mr. Natarajan, thank you so much for joining us, giving us that perspective. We'll let you go.